Are you a person who only uses one time frames or struggle with higher time frame analysis? Then this video is exactly what you need, because I'm about to show you exactly what I do from time frame to time frame. Now, believe it or not, even though you're trading a lower time frame, the higher time frame will dictate what goes on the lower time frames. And that is exactly what we're going to be going over in this video. So without further ado, let me jump onto the charts and show you exactly how I do my top-down analysis. Now, before we move on to an actual chart, I want to make sure that everybody understands external range liquidity and internal range liquidity. So having a look at my screen right now, we can see that I have drawn out a small trading range. We have a high and we have a low that I've marked out. Now the high is the highest point of this trading range prior to this high being made. That means that before this high was created, this right here was the external range liquidity high. And obviously this is the lowest point of the range. That means this is external liquidity low. Every low in between is called internal liquidity, and every high in between is called internal liquidity. Now, when we sweep the prior external liquidity high, that means this now becomes the new external liquidity high because we have swept the prior one. And what we can expect after sweeping external range liquidity high or low is a retracement down into internal range liquidity. Now we swept the external liquidity high here. Price came down, hit the fair value gap, the bullish fair value gap, which also counts as internal range liquidity. And we hit an internal range liquidity low. So what can we expect from this gap? Obviously, we can expect higher prices. And if that doesn't happen, that simply implies that a reversal is likely going to happen. So all I want you to understand is when we hit external range liquidity, we can expect a pullback into internal range liquidity and then a retracement back up to the external range liquidity again, simply because the market moves from external range liquidity to internal range liquidity to external range liquidity. Now here we have a chart of actual price action of the E-mini Nasdaq 100 on the daily chart. Now this right here is a trading range, and the highest point of that trading range is our external liquidity high. We are currently trading at around the middle of the range. Now if we go ahead and sweep this high, I am now expecting a pullback into internal range liquidity. So let's see what happens. With this candle, we sweep the external range liquidity high. Now where would I think that price is going to go next? Well, very simple, right? We have formed a daily imbalance here. So obviously that is going to be the next strong liquidity for me. And this is when I would jump to a lower time frame. Now here we are on a lower time frame. This is the 15-minute time frame, and we went from a daily time frame down to a 15-minute time frame. This line represents the external range liquidity high, and this shaded area represents the internal liquidity of the daily chart, which is that daily imbalance. So because we swept the external liquidity high on the daily chart, I'm expecting a pullback down to the internal range liquidity. So let's play it out and see what happens here. And as you can see, we went from sweeping external range liquidity high to hitting internal range liquidity. And this is essentially how the market moves. And this is how I base a lot of my higher time frame analysis off of. I wait for a sweep of external range liquidity, and then I simply will trade the retracement down to internal range liquidity. So all I had to do was look for some sort of entry model within here to send me down to that internal range liquidity or that daily gap. So now that we have hit the internal range liquidity, which is going to be this daily gap, we can expect a pullback up to external range liquidity, because again, that's how the market moves from external to internal to external. If that does not happen, that implies a reversal. So let's see what happened here on the daily chart. So as you can see, we never actually came back up to the external range liquidity high, which implies a reversal. So when you see price hitting internal range liquidity and failing to go back to that external range liquidity, then you can anticipate a reversal. And if I play it out here on the daily chart, you will see exactly that. As you can see, we failed to take out the external range liquidity high, which then caused a massive reversal on the daily chart. So that will give you a general direction of the market simply by looking at external and internal range liquidity. I'm going to go over it one more time. We swept the external range liquidity high right here, right? So this high over here became nothing because we swept it. And the high that we created now became the new external range liquidity high. So essentially what should happen if we were in a bullish market is that we hit external range liquidity, we come down, tap internal range liquidity, then come back up and sweep external range liquidity, come down, sweep or hit internal range liquidity, come back up and sweep external range liquidity again. Now, when that does not happen, which it obviously didn't here, we are continuously failing to sweep the external liquidity high, we can anticipate a reversal. And because of that, we can have a general direction or bias of the market for a longer period of time. As you can see, when we started failing to go above the external range liquidity high and digging deeper and deeper into this imbalance, we could now anticipate a reversal, and that's exactly what happened. Majority of my higher time frame analysis is going to be on the 4-hour, 1-hour, and 15-minute time frame. I actually spent very little time analyzing the daily and weekly chart, simply because I'm trading a 1 to 5 minute time frame, so it simply doesn't make sense to me to spend the majority of my time on a daily time frame. So looking at this 4-hour chart, we can see that we have an external range liquidity high here. We came up with this high and swept the external range liquidity high. And then what can we expect now? Well, we can expect a pullback down to the next internal range liquidity, which is going to be this smaller imbalance here. Remember, internal range liquidity can either be lows inside the range, highs inside the range, or imbalances. So since there are no swing lows and we only have a fair value gap, that is going to be my next drawn liquidity after taking out external range liquidity, simply because we know that the market moves from external to internal to external. So we will now go to a lower time frame. So here we are on a 15-minute time frame, the exact same chart. This is the high that took out that 4-hour external range liquidity high. Now, I'm looking for something on the 15-minute time frame now to tell me that this is indeed the next drawn liquidity, which from a 4-hour point of view should be, because we swept external range liquidity, and on the 4-hour chart, this right here is the next internal range liquidity. So that should ideally be the next drawn liquidity for the 4-hour chart. Now, to make sure that my analysis is right, I will go to a 15-minute time frame next and look for something to tell me that we are indeed going down here. Now, what would that be? Well, again, that could be a candle closure below this 15-minute imbalance, because what happens then is price is telling me that we are ready to disrespect bullish gaps and start respecting the bearish ones. So let's see what happens. And there we go. We get a 15-minute candle closure below the 15-minute imbalance. So now we have a 4-hour external range liquidity high being swept. We have a 4-hour internal range liquidity fair value gap. We have a 15-minute gap violation, indicating that we are now ready to respect bearish PD arrays and violate the bullish ones. So I will now go to a lower time frame to look for my entry, since I am very, very confident that this is the next drawn liquidity for price. So here I am on a 3-minute time frame, and because this is too far back, I simply can't go lower than that. But the 3-minute time frame failed to give me any entry. There was really no retracement, so that's unfortunate, but it will happen. But I'm sure there was something in here that we could have entered off of on the 1-minute time frame. But the whole point of this was that we knew where price wanted to go next, which was this internal range liquidity fair value gap after sweeping the external range liquidity high. And we made sure that this was indeed the next place price wanted to go by looking at the 15-minute time frame to gain that extra confluence, which we got with this large candle closure here. Obviously, that's a lot of bearish displacement, and when that happens through a bullish gap, that indicates lower prices. So I'm getting influenced by the 4-hour chart and the 15-minute chart, and I will go even lower than that to find my entry. Here we have the last example that I'm going to give you from an hourly chart. So it can also happen on the hourly chart, and from this point of view, this would be the external range liquidity low, which we have swept with this candle. Now, according to my analogy, we have swept the external range liquidity low. So the next target for price should either be the internal range liquidity high or the fair value gap. Now, when this candle swept this low, we had not created this hourly imbalance yet. Now, this is on a 2-minute time frame, and this low represents the low that swept the external range liquidity low on the hourly chart. All I'm using the 2-minute time frame for is look for my entry. So already I see a bullish unicorn model here. We have a bullish breaker block overlapping with a fair value gap. That's a high probability model in my opinion, and that's what I'm going to go with. So my entry will be this breaker here. My stop will go to the recent swing low, and my target would be the internal range liquidity high on the hourly chart. Now let's play it out and see what happens. And as you can see, it took a while because as price went on, we created the hourly imbalance, which we chopped around in for a little while, but eventually hitting our target of the 1 hour internal range liquidity high, simply because of the 1 hour external range liquidity low sweep. So that was me going over exactly how I use the higher time frame to place entries on the lower time frame. I know a lot of people struggle with the higher time frame analysis, so I really hope this video helps someone out. This is exactly what I do on a daily basis to figure out where price is going next. And sticking to a single time frame is simply just not good enough for me. You must have the higher time frame in mind. So as always, thank you for watching, and I will see you in the next video.